What's up, guys? Welcome to another edition of This Week in Crypto here at Santiment. I'm here with Dino. We have a ton to cover. It's been a down week for the first time in quite a while after a midweek crash. We had Bitcoin head back down below 46K where it's sitting now. It actually was below 45K at one point. And altcoins have been dancing wildly. We had major pumps from Solana, from Phantom. We had a mini pump yesterday, post dump from XRP and a few other projects. As we can see here, looking at the bar chart, tons and tons of polarization and different performances depending on the project. It's been, nothing short of the Wild West currently. Dino, what have you been seeing as of lately?
I mean, on my end, I was very focused on Bitcoin and Ethereum, but mostly what Bitcoin's metrics have been doing recently. We recorded a video on Tuesday. It was a very impromptu sort of reaction to the crash. It was maybe like 3 or 4 hours afterwards where we didn't yet have all the information about what's been going on, as well as, our data was still getting updated. So we weren't really sure how both the crowd and Bitcoin holders were going to react to the crash. So now we have a bit of a better idea as far as the moves that the Bitcoin holders are making. And there's quite a bit of talk to talk about, especially over the past 24 hours. There have been relatively significant moves made by large Bitcoin addresses. In particular, I'm talking about addresses holding between 100 and 10,000 Bitcoin. They have offloaded about 30,000 Bitcoin over the last 24 hours, which is unusual for them. So, we're going to touch upon that, I'm sure, during this call. We're also going to talk about Bitcoin social metrics, because as I wrote about on, I think it was Wednesday, there were a lot of buy the dip calls immediately after the crash. And in fact, Bitcoin sentiment, or the average mood towards Bitcoin based on the messages that we collect from social media, was actually turning bullish immediately after the crash. This was a relatively concerning signal for me personally, because previously, whenever we see these like spikes in buy the dip calls, they happened both in April and they happened in May. Both of those times they happen during sort of the first leg of a correction. So the crowd gets excited. They're like, oh, this is a temporary dip. This is a good time to buy at a discount. And then, a week passes. There's a sort of a consolidation period, and we have another leg down before the crowd is finally proven right. But at that point, obviously, they were wrong. So the fact that we have seen a little bit of a increased confidence by the retail sector after the crash has been concerning to me, because I think the market won't allow it. That being said, there has been a normalization of those metrics as well over the last 36 hours. So I don't know, Brian, let's just jump into one metric at a time, and we can talk about them as we go.
Yeah, let's go right into it. And forewarning, as always, this is never a call that's intended to be as investment advice. This is to inform and educate based on what our data is showing objectively through data-based analysis. So keep that in mind. Dino and I are not here to tell anyone what to do with their portfolios, simply what the divergences that are showing in Bitcoin, Ethereum, and a few other projects that we get into here today. So beginning with Bitcoin here and its circulation, we can see the pattern here hasn't really changed. Despite the volatility, we did start to climb. We had our best day of circulation since late July, and it was good to see. And it allowed Bitcoin to kind of climb and climb, got above 52,000. But notice the collapse here that was already beginning before the actual correction happened. This likely had a lot to do with Bitcoin not being able to sustain these prices. Two of the most important metrics on-chain wise for Bitcoin is circulation and daily active addresses, which we'll also get into here in a second. And when those aren't performing up to where prices are moving, we see collapses like this happen all the time. We semi-saw it even back here in May, because if we were to zoom out, I won't do it now, active addresses were a little bit higher back in the earlier part of the year, and circulation was as well, and then price collapsed. It tends to be a very common trend. And then you can see the major uptick here as the recovery was really starting to take off. This is kind of what propels things to get back to where they were. So goes both ways, and circulation in this case has not been where it should be, and that had a major factor in this at least mid-sized dump that we saw.
Yeah, so it's a question of to be perfectly honest, it's a question of how much this rally, or sort of this dump, was propelled by on-chain factors. Now, as Brian is showing right now, yeah, the amount of unique Bitcoin that are moving on the blockchain, it's still relatively low. Like compared to anywhere between January and May of 2021, we aren't really seeing a whole lot of unique Bitcoins being moved on the blockchain, and as a result, there's not a whole lot of value that you can say is being created on the network, right? So if you look at something like the NVT ratio, which is a metric that tries to figure out whether Bitcoin is undervalued or overvalued based on the relationship between Bitcoin's market cap and the amount of value being transferred on the network, the NVT ratio is currently red. The reason why it's red is because even with the current crash, Bitcoin's market cap is too high compared to the amount of value being transferred on the network. Now, obviously, this is not the end-all be-all metric, and also, Bitcoin, its narrative as a means of payment is only one narrative. Other people really see Bitcoin as a store of value. So it's it's up to you to decide how much you trust NVT ratio as a sort of a gauge of the network health. But overall, it's fair to say that Bitcoin's network activity, at least in the past week or so, hasn't been the greatest. Like what I enjoyed about Bitcoin's network activity before the crash was particularly the amount of unique addresses that were interacting with Bitcoin. And maybe we can show that, Brian, because even though the unique amount of Bitcoin that are being transacted on a daily basis remained low, Bitcoin's daily active addresses were actually rising quite nicely. So this is a 6-month view. Maybe Brian, show us a yearly view just so we can see where we were last time that we were at around 46K and where we are right now. So obviously, we mention this every now and again, there has been a clear decline in the amount of daily unique addresses that are interacting with BTC, right, since the correction. However, between the bottom on July 20th and September 2nd, there has been a 35% uptick in daily active addresses. And actually on September 2nd, and I wrote about that on Monday, on September 2nd, we saw Bitcoin's daily active addresses cross 1.8 million for the first time in over 2.5 months. So we have definitely seen, from at least in terms of the amount of users of the Bitcoin network, if you wanted, the amount of participants, the amount of holders or addresses that are interacting with Bitcoin, those have been rising. Sure, they're still relatively low compared to where we were in May and in April, but I think from that perspective alone, I think this current dump wasn't necessarily justified from a fundamental perspective. Based on most of the reportings that we saw, it seems like the crash has mostly been due to over-leveraged long, so basically originated from derivatives market, nothing that was actually done on-chain. So from an on-chain perspective, obviously now we're in a bit of a lull and daily active addresses are down again. People are getting spooked. That's completely normal. But if we see this trend continue back up, I think we're in a good position for in terms of a Bitcoin sort of short-term and mid-term price action. If its daily active addresses start to rebound and move back above 1.10, 1.20 million, like we've seen back in May and April. Now, obviously that's a big if, but it's been doing that for the last 2 months. So it's been moving in the right direction. Just needs to keep moving in that direction.
Agreed. 100%. We are semi on the road to recovery, even with this pullback here over the last week. This has been encouraging, and we're at least not down to where we were in mid-June, I should say late June to late July or so, when things were looking really bad. So yeah, we definitely just need to continue climbing on the address activity side. The worst case scenario is people start to get paralysis and don't want to buy or sell or anything in between, because they are so indecisive on where prices are going next that they do nothing. The people doing nothing are the ones who are causing utility to evaporate and for address activity to head, south instead of north.
Right. And Brian, since we're already talking about addresses and Bitcoin's addresses, maybe it's now a good time to immediately segue into Bitcoin whale addresses, right?
Sure.
Because we've been seeing some very, Brian and I talked about this before the call. There has been a little bit of a volatility in terms of the behavior of whale addresses. So on Sandbase, as some of you may know, we have this metric called supply distribution, right? What this metric allows you to see is what is the total amount of Bitcoin over time that is being held by specific groups of addresses. So two groups of addresses that we like to look into is addresses holding between 100 and 1,000 and 1,000 to 10,000 Bitcoin. So we combine those two groups together, and this is the chart that we see. Brian, maybe also show us the last year of their data, just to kind of give people the idea of what they've been doing beforehand. So this is what these addresses, essentially Bitcoin's millionaire addresses, have been doing over the past year. So between October and May, there has been a clear accumulation trend. Sure, there have been a few sort of ebbs and flows. And really, when you see when those drop-offs between October and May actually happen, they usually coincide with sort of local tops or price consolidation points. And then they started dumping, I think, right around the all-time high between the May 14th and the end of the May correction. They offloaded about 60,000 Bitcoin. So 60,000 Bitcoin basically went away from these addresses, right? And then as the correction as we started to consolidate in June, the trend once again shifted back to accumulation, and that was a good sign, right? So now we are seeing most recently over the last like 24 to 36 hours. Brian, can you tell us exactly how big that drop is? I think it's around 30,000 Bitcoin or something.
Yeah, take kind of its recent peak, which was September 5th. We had 9.2 million. And between then and now, we're down to 9.13 million. So we're talking about 70,000 Bitcoin dumped in the past 10 days.
All right, so even more than I thought. It's a big number. So this can mean a couple of things. Now, obviously, here what we're looking at is we're only looking at the sort of totality of all Bitcoin held by these addresses. We don't know who these addresses necessarily are. So Brian, if you zoom out of this one, or actually go back to Sandbase and just show us what's been going on with the group that's one higher than this one. So 10,000 to 100,000. Yeah, and you can also include the other one as well, just so we can compare it.
Other one as in?
The two merged ones.
Oh, got it.
A minute ago. Because you'll see that. Yeah, there you go.
Perfect. No, that's not it.
100 to 10,000. Yeah.
There we go.
Yeah, so you can see that one of these groups has been declining, but the other one has been rising, right? So we are seeing, what we're seeing essentially is the 100 to 10,000 BTC groups, the group of addresses, is declining their total balances, and the balance of addresses only between 10,000 to 100,000 Bitcoin, so very large addresses, is actually increasing at this point in time. Now, usually this last group of addresses, so basically any address that holds more than 10,000 and above, usually I consider this to be mostly populated by exchange wallets, because at this point in time, as we're talking, there's only 82 addresses that have more than 10,000 Bitcoin. So it's fair to assume that this, although it's not completely sort of concentrated in terms of it being populated by exchange addresses, this group of addresses is majority, I think, dominated by Coinbase, Binance, the likes. So this would or could suggest that we are seeing whales offloading to exchanges. However, one other clue that might actually tell us that this is not the case is if we look, Brian, at the exchange flow balance for Bitcoin and the supply of Bitcoin on exchanges. Because even though this current chart would suggest to us that whales are moving their money to exchanges or their funds to exchanges, what we're actually seeing is that the supply of Bitcoin on exchanges has been dropping over the last 36 hours, and it's actually dropped quite a nice penny. Yeah, so there you go. What you're seeing in red is the total supply of Bitcoin on exchanges, on all exchange wallets that we currently track. So look at that last point of data, the last 24 hours, and what you see a pretty significant drop, right? So that means that the total amount of Bitcoin that is available on exchanges is less today than it has been yesterday, right? And then if you look at the exchange flow balance, which is the difference between Bitcoins moving into exchanges and out of exchanges, it's clearly moving out of exchanges. So both of those suggest that there's money actually being withdrawn from large exchange wallets, which when you sort of look at that in combination with those whale metrics, I think what that seems to suggest is that there has actually been withdrawal. Like large addresses have been withdrawing money from exchanges rather than depositing to exchanges, which then would be a positive signal, right, Brian?
Exactly right. When you see the whale metric moving down and in tandem with supply on exchanges moving down, it's a pretty good sign that there's some withdrawing going on. And it looks like, based on the balance, there was a massive outflow spike. This was the biggest we saw since late July. So give or take a 6-week high or low, if you will, in terms of the outflow versus inflow balance going on.
Yeah, so Nicola here in chat says, I feel like you're trying very hard to prove a bullish point. This is clearly a neutral to a bearish sign. It could be. Look, at the moment, I'm just trying to contextualize the data to the best of our abilities. So from a perspective of only looking at large addresses and only trying to sort of analyze that chart in a vacuum, I think it's fair to say, based on the historical trends of that group of addresses, anytime that they've offloaded funds, it wasn't a great time for Bitcoin. So I think that's a completely fair point. And usually that's really why we look at those addresses, right? Because previously, historically speaking, they have been the ones to tell us what the whale sentiment has been. But I can't also, I think I would be remiss not to mention what I'm seeing in terms of the supply of Bitcoin on exchanges. Like, it's clearly declining overall. So if that money is going to known exchange wallets, we're not seeing it on the charts. Like, if there are whales that are moving a bunch of coins to Binance, to Kraken, to Coinbase in order to sell, currently at least, it's not showing up on from an on-chain data, right?
Yeah, and to address his point, this is neither a bullish or bearish point. For one, that's not what we do here. We're not trying to indicate whether from here it's bullish or bearish. What we are saying is this is an explanation for what was happening during the dump and post-dump. As of where we go next, that's what this data is for, to see what the exchange flow balance indicates and whether the supply on exchanges begins to rise in tandem with that whale graph that we just showed starting to move back up. That would be a bullish sign. If it continues on this trend, that would be bearish. So it's about looking for these hints before the price action actually happens.
Right. So since we're now on the topic of exchanges in general, I think it's a good idea to sort of mention once again something that we discussed during the Tuesday call, which is the behavior of stablecoins in relation to the crash. So some of you may know, I write about this every now and again. The behavior or the relationship between stablecoins, exchange inflow, and Bitcoin's price action has been very interesting to me. It's not something that a lot of people, I mean, I've seen every now and again it being mentioned in the news or whatever, but I don't think it's as explored as it could be. So Brian, if you can plot the price of Bitcoin and then show us over it the exchange inflow of Tether over the last maybe 6 months. Right. You can zoom into, to the last maybe. I mean, this is fine, actually. Just zoom out of that massive spike so that we can see everything else a little bit more clearly.
Yeah, let's double it, go last 6 months here.
There we go. So this is what we're seeing right now is the amount of Tether that is being moved to known exchange wallets over the last 6 months. So the idea here is that when you see large amounts of stablecoins being moved to exchanges, especially while they happen during large events of price and market volatility, what this could mean is that there's an increased propensity of stablecoin holders to exchange those bags for more volatile cryptocurrencies, right? Otherwise, why would they be moving their bags to exchanges? The other reason why they might be moving their bags to exchanges is because of arbitrage, right? Because market volatility usually introduces a lot of decent arbitrage opportunities, and that's what some stablecoin holders like to look for. But if you look at the exchange flow balance, Brian, for Tether at that time on Tuesday, you will also see that there has been, in totality, there's been more Tether moving to exchanges than from exchanges. So what you're looking at exchange flow balance for Bitcoin.
Excuse me.
So what that suggests is that overall, there's been more Tether moving to exchange wallets than out of exchange wallets. So if it was a purely arbitrage, it would be, usually it remains flat. So that's one sign that we saw. We saw similar things in USDC as well as BUSD. There has been a little bit of an uptick in the amount of all of those stablecoins moving to exchanges between Tuesday and Wednesday. So some on-chain analysts believe, and if you zoom out, Brian, just a little bit, maybe to the last 8 months, what we'll see is we see that these spikes do sometimes coincide with local bottoms for Bitcoin. So some on-chain analysts believe that this sort of points to an uptick in sell-side pressure. You can cancel out the exchange flow balance, Brian, just to make it a little bit less noisy. There we go. So let's look at the last couple of spikes in exchange flow balance. There was one in February. There we go. So right there at the after the drop, right after the February crash, that was one large spike in the amount of Tether moving to exchanges. Then there was one in April. There were actually two in April. There was one before the short-term sort of relief pump, and then another one during the actual bottom, and then there was another one after that in May, right around the start of the consolidation for BTC. And then another one at the local bottom afterwards, albeit a smaller one, maybe in June, I think it's June 20th or something. Yeah, right there.
22nd, yep.
There we go. So there has been sort of some historical precedent to suggest that large uptick in stablecoins moving to exchanges, especially if there's other clues that suggest that this is not arbitrage, it could mean that stablecoin holders are, just ask yourself, why else would stablecoin holders be moving their money to exchanges? The presumption is to look to buy the dip. And if we look at, Brian, the mentions of buy the dip over the last 6 months, we will see a massive spike in the last couple of days.
Yeah, let's check it out. Biggest spike by a mile.
Yeah.
Yeah, this is quite interesting. I mean, sometimes, as we can see, the crowd absolutely nails it. And very often there will be a dip buy, regardless of whether the crowd is picking up on it. And then very often it'll lead to a little bit of a further down pace until people decide it's no longer time to buy the dip. And this must be the big one where it's going to keep going down. And as soon as they decide that, that's the actual dip buy opportunity, which is really funny. We saw here, this cluster of buy the dip calls actually be perfect. We saw this one be semi-good before it actually came back down. And then there are kind of like these, if you want to call them semi-high spikes going on here. So
I mean, you can zoom out, Brian, and we'll see, zoom out to the last year. The reason why I'm kind of squeamish about this buy the dip, this spike in buy the dip calls, basically, guys, what you're seeing right now, it's our social trends page where you can type in any word or phrase, and what you will get in return is the amount of mentions of that word or phrase on crypto social media. So at the moment, we track about 1,000 or more crypto social media channels. And this chart is showing all of the times that the words buy and dip were found together in the same message over the last, 1 year. So, okay, let's explore a few other times that the crowd was previously talking about buying the dip. So let's start with the April crash, Brian. So we saw 2 spikes in April and a couple of spikes in May, right? So that was the first one, right? The one before that. No, just also in April, but slightly before. There we go. So that's the first one where we saw there was a crash in April, and then we saw people talk about buying the dip for the first time. Now that was too early, right? They started talking about buying the dip when we were still at about 60K, I think 50, 54. That was early. There was a lot of excitement in the air, and we went through another leg of correction before the crowd said, "Oh, buy the dip," and by the way, they were right. So usually, and then let's look at May, right? There were 3 or 4 spikes in buy the dip calls from the crowd. So the first one actually happened immediately after Tesla announced that they're no longer going to accept Bitcoin as payment. That was the first leg of the correction, and a lot of people were like, "Oh yeah, this is great. This is awesome. I was waiting for something to crash the market a little bit so that I can buy at a discount." So there were a lot of buy the dip calls then, and then the China news came, and then there was another sort of round of buy the dip calls, and then once again, sort of at the end of May, we had another massive spike in buy the dip calls, and even that one wasn't really entirely correct. It wasn't until June, that spike in June, that the crowd was really correct in saying, okay, now might be a good time to buy the dip. So usually, what I'm seeing historically is when the crowd starts talking about buying the dip, it's not the actual bottom. Or it hasn't been over the last year. It's usually the beginning, but it's not. There can be it can be preceded with another sort of leg down. I'm not saying this is obviously necessarily going to happen, but historically speaking, it's not a great sign to see a lot of market euphoria after a crash, if that makes sense, Brian.
Makes perfect sense. Yeah, I think it's really just about whether the crowd can lift up the price now, or whether people are going to become fearful now. We did have one isolated spike. It doesn't look anything like the cluster from early May to mid-May, but the crowd tends to be good in the short term at making calls, whether it's buying the dip or pumping up a coin or dumping a coin or anything in between. How they react to the news in the short term will usually go in the direction of what the crowd thinks is the right thing to do. But in the long term, the opposite tends to occur. For example, the mid-May huge spikes in buying the dip, which for the short term, if you look at this mini spike, it worked out okay, but it ended up ranging for a while and then actually going lower. And then all of a sudden, people aren't even mentioning buying the dip until this one here, which ended up being correct. But this is kind of a pretty dwarfed spike compared to what we saw going on here. Yeah. So it's kind of a matter of capitulation. When the crowd gives up on buying the dip, that's the actual dip to buy.
So we're about 25 minutes past. I think there's a few other interesting metrics that we want to touch upon. So I wrote an insight. You can find it on insights.santiment.net. A few days ago. It's called Market Crash. Do you want good news or bad news first? So in it, I mentioned several sort of interesting charts. And actually, yeah, we can look into the article and then look at them right there. So usually what we like to look for when it comes to these market-wide crashes, right? We like to look for signs of pain in the market, because, it's a fact of life that the market looks to inflict as much pain as possible to their participants. And so usually this leads to weekend shakeout, and it's a painful but necessary requirement for another leg up or a relief pump or whatever. So the question on my mind was, are there signs of pain and weekend panic sell-offs in on-chain data? And sure enough, there are several. So this is the first one, Brian, that I showed. You can click on it to zoom it a little bit. So the first one that I mentioned was the fact that the amount of Ethereum moving to exchanges overall, so this is the net flow, this is Ethereum moving in and Ethereum moving out combined, you can see a pretty big spike in favor of Ethereum moving into exchanges immediately after the crash, right around the bottom, actually, suggesting that there has been some panic sell-offs, holders looking to likely offload some of their Ethereum positions because they were fearing further correction. So that was sort of early signs that we are indeed seeing a little bit of a concern about Ethereum. Now, if you look at previous times that we saw spikes in exchange flow balance, look at the May, right? So both of those spikes in May in Ethereum's exchange flow balance happened. Yeah, so that one first before a relief pump, and then we got another capitulation spike, sort of at the very end of May, coinciding with another local bottom. And then we had one in June, sort of late June, near the bottom, and one in July. I think it was July 22nd. There we go. Another sort of spike right around actually the right after Ethereum crashed and Bitcoin crashed below 30K. So there were, also some previous times where a lot of money, a lot of Ethereum was moving to exchanges, coinciding with potential price recovery period. So that was number one. And then, Brian, the second metric that I showed was Bitcoin's network profit loss. So this is a metric, very simply put, that tries to visualize the total, sort of the average profit of all, or the average ROI of all daily transactions on Bitcoin. So without going into how it works, you can read it in the article. But when you see spikes in this metric, it means that on average, coins that are moving on the Bitcoin blockchain are moving at a significant profit on average relative to the last time they moved on the blockchain. And then when you see dips, that means that on average, coins that are moving on the blockchain are moving at a loss relative to the last time that they moved on the blockchain, suggesting capitulation and weekend sell-offs. So we have seen, even though here it doesn't look all that low, this latest drop in Bitcoin's network profit loss is, first of all, it's the lowest point in Bitcoin's network profit loss since July. And second of all, these dips that you see in May and July and June, those are the all-time lows. Like, these are the biggest drops in Bitcoin's network profit loss ever. These were some massive capitulation events. So really what you're seeing is quite a bit of Bitcoin being moved at a relative loss at $46,000. Now, just put that in perspective. There have only been a couple of months now, right? Maybe not even months, where Bitcoin's price action was higher than 46K. So the fact that on average, all units of Bitcoin that were moving on the blockchain after the crash were moving at a loss suggests that this has been, mostly this activity has been prompted by weak hands. So it's another sort of sign, and we have seen it previously around local bottoms for Bitcoin, that holders are in pain. They're looking to sell because they're fearful of further corrections. Right, Brian?
100%. Yep.
Yeah.
You're seeing exactly visually what Dino's saying. Holders are in pain. They did not expect this dip. It was very much looking like we were going back toward that all-time high range that we saw in April. And instead we get this big drop off. And it's very common, very cyclical in crypto markets where things become overheated, traders become too confident, and then we see this kind of massive capitulation form. I put out a poll a couple days ago asking people what they did when they first saw this dip buy, or this dip opportunity, that is. And it was an enormous ratio of people who were saying, I'm buying the dip versus selling the dip. And then an equal amount of people saying I'm doing nothing. So it was about 40 to 45% people buying the dip, 40 to 45% of people doing absolutely nothing. And then the change was just people that were actually selling or planning to make a move in the future. So that tells us that there's still a little bit of overconfidence to go along with people who are kind of in fear right now, and people who are kind of stagnant because they don't know what the next move is going to be.
Right. So yeah, generally speaking, based on social data, it does seem like the crowd is still a little bit too excited. Now, let's not go through all of the metrics in this article. Check it out on insights.santiment.net. There's a few more very interesting metrics that I mentioned in it. Brian, yeah, good. You've already got sentiment metrics set up. While Brian is setting this up, I'll just mention in chat, because Max is already writing. We're going to start taking audience questions soon. So we're going to go over a couple of more metrics for Bitcoin just to give you an idea of what we're seeing right now. But afterwards, we're going to, take a look at some of the coins that you guys want us to look into. So if you have specific assets that you are currently paying attention to and you would like us to do some impromptu analysis, some quick 5 to 10 minute analysis based on some of the metrics that we have, let us know in chat. Bonus points if those coins are available on Ethereum. The reason for that is at the moment, our on-chain data, so on Sandbase, we cover or provide on-chain data, social data, and development activity data for over 1,500 cryptocurrencies. However, our on-chain data is currently only available for Bitcoin, Ethereum, all ERC20 coins, Litecoin, XRP, and BNB. Now, if you want us to look into some on-chain metrics, like we've looked at whales, we've looked at exchange behavior or the behavior of exchange wallets, those types of metrics are limited to the coins that I just listed. That's still about 1,200 coins, so you should have more than enough choices. But if not, we can still look, like if you want to look into something like Solana, because I know it's very popular right now. If you want to look at something like Cardano, we can look at those coins as well from a social perspective, from a development activity perspective. But if you want us to look into more sort of on-chain wise analysis, make sure that it's the coin lives on Ethereum, or it is Ethereum, because we haven't really talked about ETH all that much. Anyway, go ahead, Brian.
Yeah, so as far as this graph here goes, weighted social sentiment, what we're looking at is the combined balance, which is the amount of social volume that we were just looking at on social trends, multiplied by the unique social volume. So to rephrase that, unique social volume was the blue bars we were just looking at. The balance is the actual ratio, if you look up here, of the positive versus negative score of comments according to our algorithm, which can automatically pick up whether the tone of a comment is positive or negative or somewhere in between. And generally speaking, when we have these big high spikes, it's a sign of major euphoria and people assuming that Bitcoin is going to the moon, skyrocket emojis, the whole deal. And then when we have these low spikes here, it's an indication that people are extremely fearful, and it very often coincides with the bottom. You can look, fairly just over the last year, it's been a quite reliable indicator, and it does even provide padding of a few days to react to it, which is a great sign that it's a good leading metric. So we can see here, for example, this big cluster of negativity that kind of propelled the big bull run starting in September and early October. And then we started getting euphoric. It went on for a long time, but we eventually had, a third of it come back through a pullback, if you want to call that a pullback, followed by, people getting negative right around here, and then a big spike up. And once we got that big spike up and we were in the March all the way to early April range, that's when we started to get negative, interestingly, as people were actually doubting whether we could hit an all-time high. And then we got up to over 60, and that was the big psychological barrier that people kind of saw and said, okay, I guess we really are just going to go up forever. They got a little more positive again, and then we had the big dump. And then again here, everyone was saying it's dip by time as we were going down, and it ended up not really being dip by time because people were still so euphoric and confident that this was just a blip in the radar. It became an actual serious big deal for about 2.5 months or so until we finally got very fearful here and then skyrocketed back up. And it's basically a cyclical game where people get overly euphoric or overly fearful, and the markets do the opposite.
Yeah, for sure. And now we are looking at the last data point, which is, I think, positive. The fact that, so since the correction, there has been, as Brian is showing right now, there has been a little bit of an uptick in terms of the average sentiment towards Bitcoin. Makes absolute sense. I think I've seen a lot of, at least on my timeline, a lot more people were talking about buying or us sort of bouncing back very quickly rather than talking about what might happen if we drop below 40K or something. So more people were positive than negative, and this shows on this chart. The last day or so, it seems like the average sentiment towards Bitcoin is moving back down to sort of neutral territory. We have done some backtests on this idea of what happens with a coin's price during times of extremely bullish sentiment. And previously, based on these backtests, it seems like extremely bullish sentiment is not a friend to cryptocurrencies. More often than not, it has been a precursor of local top or incoming price consolidation. So the fact, generally speaking, what you want to look for is you want to look for extremely bearish sort of sentiment in the crowd pretty much giving up on a coin before we can sort of hope for a sustained price increase, right? So that's, I think, good enough for our social metrics, Brian. The last thing that we want to look maybe into is MVRV for Bitcoin, because it's been dropping quite steadily, and I think it's a good thing that it is, because it's looking healthier than it did a couple of weeks ago, right?
Oh yeah, we had been in a positive territory for MVRV since late July, give or take July 22nd or 23rd. We were over average in terms of the average trading returns of 30-day investors when they opened their investment in Bitcoin or an add-on to their trade. 30 days had gone by, and through the FOMO and FUD that they were producing in their mini trades in between, the MVRV slash average trade returns were up over 20% at its peak in early to mid-August, August 9th to be exact. We went a little bit higher as people were really taking profit right here. And then eventually we started to notch back up to close to 10%. And then boom, we have this big fall off into negative territory. It isn't severe territory. We're currently at around -4%, but it's at least indicating that we are now in a less risky buy opportunity position compared to the historical average for Bitcoin on the 30-day scale here. And that's pretty significant, especially when it's been about 6 weeks since we last saw that, right, Dino?
So yeah, I mean, 30-day MVRV ratio essentially it tries to show it uses some on-chain analysis, and it does make some assumptions. So it's not a perfect metric, but it's an on-chain indicator that tries to visualize the average profit or the average loss of all addresses that have acquired Bitcoin in the previous 30 days. So at the moment, we can see that the average loss of all addresses holding BTC over the last 30 days is -4.3%. So they're down on their initial investment. They're below break even, right? So the way that people use this metric, on-chain analysts use this metric, is that the higher the MVRV ratio is, the more unrealized profits there are. And as a result, the more risky it is, because the more likely it is that holders are going to start claiming those profits and applying sell side pressure, right? And so the lower, on the other hand, the MVRV ratio is, the more opportune time it can be to accumulate, at least according to some analysts. So, Brian, let's look at the last 5 years, or maybe 3 years is fine enough for Bitcoin's on-chain data for MVRV ratio in particular. Because there we can see that anytime that Bitcoin, there's sort of an established resistance zone for Bitcoin's MVRV ratio. Anytime that we see Bitcoin's MVRV sort of come close to between 15 and 20%, it usually starts to become unsustainable. Yes, there were breakouts to as high as 40%, but those don't last for more than a couple of days. So the fact that we were getting close to around 15%, I think before the crash we were at about 11% or 12%, it was already sort of moving into that territory where short-term holders seem to, at least historically, like to take some profits off the table. So with this crash, once again, swing traders for Bitcoin are back below break-even. And the lower that we get, you can see that several sort of historical lows for Bitcoin's MVRV ratio coincide with periods of upcoming price recoveries. So at least from a perspective of this metric alone, the lower that we get, the more opportune time it would be to accumulate BTC. Obviously, this is just one metric. Take everything with a grain of salt. But at the very least, it's nicer to see that Bitcoin's MVRV ratio is outside of that danger zone now. Yes, it can drop lower, absolutely, but there's a more sustainable path to another leg up now than there was 3 days ago, 4 days ago, right? And Brian, we can see the same thing in Bitcoin's 365-day MVRV ratio. So that's a metric that essentially looks at the average profit or average loss of all addresses that have acquired Bitcoin in the past 365 days. So what are the long-term Bitcoin holders doing? Where are they at right now? And we can see that they were as high as, 30%, plus 30% before the crash. And then we're now down at plus 13%. So they're still up by a little bit. They still have some profits that they're sitting on that they could realize and claim. However, you can clearly see that historically speaking, the 365-day MVRV ratio is way, way behind its bull cycle high. So there's room to grow, so to speak, even though technically we are still overvalued. Really, if Bitcoin's MVRV ratio drops down to minus 15%, that's historically a very low level. And it did drop at the end of June there, or July, right? This is where we started to recover. It's not, it's now quite a bit higher, but there's more room to grow before we can reach those danger zones for Bitcoin. So yeah, MVRV, I think it's a decent metric to understand whether there's a desire or an incentive for certain groups of holders to start selling their bags. And at the moment, there's just not a lot of incentive, especially for short-term traders, because they're down on their initial investment. That's going to do it for us as far as Bitcoin is concerned. So Max, let us know what people want to see. I'm seeing some ADA, I'm seeing some Doge. What's the consensus there? Which coins got the most requests?
Yeah, so keep voting, everybody, because I think we had more requests than we have actual votes now. Currently, top one is Dogecoin.
Okay.
Oh boy.
Give that a look.
Okay, cool. Sure. Brian, do you want me to share my screen?
Up to you, yeah.
Okay. Let's switch it up a bit. Let's see where we are with Doge. Okay, so Doge not an ERC20. I warned you guys, but we can still look at some social metrics for Doge just to see where we are at the moment. So let's unlock this metric. All right, so this is, let's look at the last 6 months. This is Doge's price action over the last 6 months. Obviously, a fairly significant crash, one that's been felt by a lot of altcoins. So let's look at its social metrics. So this is the amount of mentions of Doge on crypto social media over the last 6 months. And you can definitely see where the hype around Doge was and where it is right now. So we can see massive spikes in the mentions of Doge on crypto social media. First of all, around this first local top, and then the second one, and then right here at the start of the consolidation, and then at an all-time high, and then around the several sort of local tops and bottoms here as well. Since then, we can clearly see that the crowd is no longer, paying too much attention to Doge. We can also look at Doge's social dominance, which is a metric that essentially compares the mentions of Dogecoin to the mentions of other top 100 cryptocurrencies. Just to kind of put in perspective where Doge's social dominance is compared to other coins on the market. So you can see, look at this. Look at this craziness here. 34.5%. That means that out of all the coin-related mentions that that our server has been tracking at this point in time, around 34.5% of those were Doge-related. It was a massive story, and I think it's a lot of times sort of coinciding with Elon Musk tweeting about Doge. At the moment, it's just 2.5%. So I think it's fair to say that the crowd does not really care about Dogecoin all that much anymore. We can also check what the overall sentiment is for Dogecoin. Let's see here. All right, so this is, there we go. So this is Dogecoin's average sentiment on Twitter in particular. So we can see several sort of significant spikes in Dogecoin's sentiment right around the start, the sort of the first leg of the rally and then the second leg of the rally. Typically speaking, as we mentioned before, massive spikes in sentiment, not necessarily a great indicator for the crowd, for the coin's future price action. Even here at this local top, as soon as we went into a positive territory, we started breaking down. Currently, though, it's relatively low. So, I mean, look, it's a question of how you value coins like Dogecoin, right? Because they're not really a utility coin. They live and die by the memes. So for the time being, there's not a whole lot of chatter about Dogecoin. There's a relatively bearish sort of bias towards Doge. Now, typically, I would say that these are all decent signs, because the more the crowd is sort of paying attention to a coin and the more that they're hyping up the coin, usually or typically speaking, that's the time that we see an increased risk of a correction. So from that perspective, Dogecoin is looking okay. It's just not really, people don't really care about it at the moment, which although it might be sort of ironic, might actually be good for the coin. Now, we can also look, I like to look at this every now and again, look at the mentions of Elon compared to the price of Dogecoin. So give me 1 sec to set that up. because you'll see some correlations. Quite clear, actually. So, okay, let's look at DOGE. Sorry, give my computer a second to compose itself. Here we are. So slug is Dogecoin. So let's change it here to Dogecoin. And voila. Now what we're going to see as soon as this page loads is we're going to see the amount of mentions of Elon on crypto social media compared to the price of the Dogecoin. All right. Sorry, my computer is sort of dying today. Will be with us in a second. Essentially, what you will see, however, is you'll see massive spikes in Elon-related mentions every time that the Dogecoin starts spiking like crazy. Because typically speaking, it was Elon Musk that has been tweeting. There we go. That has been tweeting about Dogecoin a lot, and its support of the meme coin has been quite heavily correlated with the price performance of the coin. So we can see Elon related mentions spike first time here at the first signs of Doge's breakout. Second one here. Then we got another spike in Elon related mentions here. Another spike near the all-time high, and then another few large spikes before the correction, and then another spike here at the next local top for Dogecoin. So there have been times where Doge would be pumping and Elon Musk mentions would be rising, and that would coincide with the local top for Dogecoin. The reason being is that, you know, the crowd is in. Everybody is aware of the rally. Retail is becoming a bit too greedy, and as a result, there's a need for price normalization. At the moment, nobody really is talking a whole lot about Elon nor about Dogecoin. From those perspectives, at least, I think you know, there's a decent chance for Doge to recover. Obviously, the problem is figuring out what are Doge's fundamentals. If not, it's a memery, right? But that's a more complicated question that I don't think that we can really dive into today. Anyway, that's going to be it for Doge. Max, what are the other coins that people want us to look into?
So we only have like coins with 1 vote each.
Okay.
I tried to break the tie for AVA, Travala.com, assuming it was an ERC20 token, and then I realized they switched to BSC, I think.
I think so, yeah.
So the ones that we have the most data on that were voted for are XRP and Hex.
We've done Hex last week, so let's do XRP. All right. So let's start with the general activity of XRP, the XRP token. So I'm going to zoom out, actually, to give you a better idea. This is the chart showing the amount of unique addresses that are sending or receiving XRP on a daily basis. Now, what you'll see is a pretty decent sign, I think, over the last 30 days. So if we take this as the starting point and we look at it up until here, we can see that the price of XRP, actually, let's start before the correction, because honestly, I don't think the correction was had anything to do with like on-chain data. I don't think it was preceded by any moves on-chain. So let's look at it before the crash. So before the crash, the price of XRP was up by 84%, pretty good, between like August 5th and September 5th, and the amount of addresses interacting with XRP were up by 190%, almost 200% rise in the amount of daily addresses that are interacting with the XRP token. This is good. I mean, I think personally, good for sort of a from a value investing perspective, for as a long-term indicator, sustained price rallies like sustained network activity rallies or sort of spikes in network activity. So anything like if you look at Bitcoin, let's look at Bitcoin, right? Last year. this is what Bitcoin's daily active addresses look like. It's a very slow but steady rise in network activity since the sort of December 2019, right? There was a clear uptrend in the amount of addresses interacting with BTC, pointing to, once again, a rising network effect. And eventually, the price action caught up with it. So this is what I would like to see for any coin, XRP included, is the sort of, obviously we're very sort of early, I think, but this type of a slow, steady rise in on-chain activity that doesn't just happen for a couple of days and then drops off, because these types of spikes in on-chain activity, in daily address activity, usually what they point to is a lot of addresses looking to offload their bags and just get out of the market. So when you have these sort of more tempered rises in on-chain activity, I think that's better because it points to sort of an organic growth in the amount of interest and demand for that coin. So 24,000 addresses interacting with the XRP token, that's not a small amount. That's actually quite high. I mean, like I said, we currently have on-chain data for Bitcoin, Ethereum, all Ethereum coins, XRP, Litecoin, and a few others. I think this would put XRP within like the top 5 coins in terms of daily active addresses, based on at least the coins that we are tracking. Obviously, it could be that Solana has more now, that Polkadot has more as well, but from the perspective of data, or sorry, the coins that we're tracking, this is decent. It's pretty good. I hope for XRP holders, I definitely am hoping that this continues in the future. We are obviously seeing quite a big drop off from 29,000 all the way now to 24,000. So if this is the beginning of the sort of consolidation for Ripple's network activity, unfortunate, but hopefully it's not. Hopefully both Bitcoin and XRP, they start pumping in terms of their day-to-day network activity, because that means more value is being created, and that means there's more fundamental justification for another leg of the rally, right? All right. Let's also look at the MVRV ratio for Ripple. So let's do last couple of years, I think. Okay. So this is Ripple's 30-day MVRV ratio. So I think this is a good sort of first support, or sorry, resistance level at about 20. What is this? Like 25%? Yeah. Obviously, there have been spikes, but usually not lasting for more than what? 2-3 days, a week tops. So usually when you look at XRP and its MVRV ratio is higher than 25%, that usually means the short-term traders like to take some of the profit. So it might be a period of downward price pressure. At the moment, XRP's 30-day MVRV ratio, similar to Bitcoin and similar to a lot of coins now, is down. It's in the negative territory, down -6%. So short-term XRP holders are actually not in profit. They're below break-even at the moment. So there's going to be, the more that this continues, there's going to be less incentive to sell because you're just not even recouping your initial investment. So like I said, according to some on-chain analysts, the lower the MVRV ratio gets, the more opportune time it can be to accumulate. So we are now like officially, I guess, in the negative territory. There's still more room to go down, but I think if its on-chain activity continues to look positive, I think this is sort of a decent setup of moving forward. Obviously, I think it's too early to say whether that's going to happen or not. Its long-term MVRV ratio has also declined from like plus 80%, which is pretty high, to plus 47%. So long-term XRP holders, they're still about plus 50% on their initial investment. That's still a lot of cash that they can move off the table. So obviously, I would prefer us to be like here, right, and daily active addresses to grow, because that would mean, okay, network activity is rising. We're very undervalued. It's a good sort of a decent opportunity. At the moment, it's not that great of an opportunity. Like I said, it would be better if it's very low, historically speaking. But there's more room, I think, to grow before we reach sort of bull cycle highs, right? So at least that's sort of something that that you should keep in mind. Let's look at Ripple's sentiment. Okay. All right. Well, it seems like there has been quite a bit of excitement about Ripple. So, okay, let's first of all look at previous sort of spikes in Ripple sentiment. Here at the all-time high. Here, another sort of cluster of bullish sentiment spikes coinciding with local tops. Here, after the at the beginning of the correction. Here, at the local top as well. And then most recently, we had it. It seems like it happened. Let me zoom in to see. Seems like it actually started while XRP was still going up, right? But even as it started to crash, there has been a little bit of a. Actually, let me zoom into the last 6 hours or move it to a 6-hour interval to see it a bit more clearly. Okay. Yeah, so Ripple started to crash, and the sentiment was positive. It seems like there was just a lot of buy the dip. Oh, buy the dip, Ripple is crashing. It's just a short-term market correction, whatever. What's good about this is that over the last like 36 to 48 hours, the average sentiment towards Ripple has completely sort of normalized back to sort of slightly bearish or neutral to bearish. So this is where I would like us to be. I would actually, to be perfectly honest, like us to be even lower at about like -1 standard deviation from the mean. So yeah, keep an eye on this chart. I personally, what I don't want to see is I don't want to see these like massive upticks in positive sentiment towards XRP, because typically speaking, like even here, right, it coincided with at least a short-term correction before we were able to push forward. Like we needed to go into a relatively bearish zone before the market started to recover, or the XRP, the price of XRP started to recover. So that's as far as its social metrics are concerned. Let's also look into what its long-term holders are doing, just to see whether there's a. Oh, right. So XRP has these sort of very frequent spikes in age consumed. Age consumed is a metric that tracks the movement of previously dormant coins. So this, I think, has something to do with their escrows. So I wouldn't really consider this as a sort of irrelevant market signal. So actually, let's then not do that. One last thing that I want to look into is the transaction volume for XRP. Okay. Transaction volume and circulation. Yeah, quite a spiky. Let's do a 7-day moving average for circulation and 7-day moving average for transaction volume. All right, so both of these. So what's the difference, right? The transaction volume shows the total amount of the total amount of all XRP coins that are moving on the blockchain, right? So if I send 5 XRP to Brian, and Brian sends 5 XRP, those same 5 XRP back to me, and then I send that same XRP back to him, in the transaction volume chart, that will count as 15 XRP being moved. Circulation only looks at the amount of unique XRP being moved on the blockchain. So those same 3 transactions of the same 5 XRP, it would only show up as 5 XRP being moved on the circulation chart. So if you want to sort of eliminate some of the potential on-chain manipulation, you would look at circulation rather than transaction volume. But I think both are interesting to look at. And yeah, definitely sort of a clear decline in the general amount of value being transacted on the XRP network. It seems to have been picking up quite a bit before the crash. So I hope, this is all before the crash, by the way. Yeah, it's a couple of days beforehand. So I hope, for the sake of XRP holders, I hope to see both the active addresses start to increase and the general amount of value being transmitted on the XRP blockchain continue to move in the upward direction. Because from a fundamental perspective, that's what you can go off on. Like, is the network being utilized? Are addresses, i.e. participants, actually interacting with the network or not? If they're not, what's the point, right? So yeah, so I think that's gonna do it for XRP. I think we have time for one more before we end it. Anything else interesting in chat, Max, that people want us to look into? Okay, sure. I mean, we can look at Hex. This is Hex, by the way. So I mean, look, I don't want to be patting myself on the back or whatever. But last week, I think we covered Hex, right? Did we cover Hex last week, Max, or was it the week before? I can't remember.
I want to say 2 weeks ago.
Yeah, I think so, but I'm not sure.
Even better, because 2 weeks ago, we were talking about Hex, and we were talking about this rise in daily active addresses. And I said, a similar thing that I said for XRP right now. I said that this is a pretty interesting signal, that it's very, I mean, it's difficult to make this a, no matter what you think about Hex from a fundamental perspective, from the utilitarian perspective or whatever, there's no denying that users or sort of crypto investors are using this coin. So let's talk about what happened 2 weeks ago. It was probably around here, right? So even here we had daily active addresses rise by about 175%. And then here we had daily active addresses rise by 340%. So last couple of months, the amount of addresses interacting with this coin has increased dramatically. There's just no two ways about it. I think 2 weeks ago, I have also compared the amount of activity on Hex compared to other ERC20 coins, just to put that into perspective. I can do that again to give you guys an idea of where we are right now, or sorry, where Hex is right now in terms of its network activity compared to other big shot coins like Uniswap, Chainlink, Maker, all of those sort of established coins on the Ethereum blockchain. So what we're going to do, we're going to go to our screener, and we're going to put in two filters. We're going to say, show me only the coins that live on Ethereum, or basically show me only ERC20 coins. And then the second thing that we're going to say is, show me the coins that have more than, let's say, 2,000 daily active addresses, just to be sort of conservative, right? So market segments, we say, only show me coins that live on the Ethereum. So this is going to narrow this list from 2,000 to 1,200 assets. And then we scroll all the way down here to daily active addresses. And we say, okay, only show me out of those 2,000, show me only the coins that have had more than 2,000 daily active addresses on average, let's say in the last 7 days. What's the list? Here's the list, 13 coins. This is Ethereum, Hex. This is by market cap, but we can also, give me 1 sec to see if I can also rank it by daily active addresses, just to give you an idea. Yes, so, okay, so let's do without these. Development activity, I don't care. This, I don't care. Percent change, I don't care. Okay, so now if we sort of filter them by the amount of total daily active addresses over the last 30 days, Hex is at number 11, right? So the average is, in the last 30 days, the average amount of addresses interacting with Hex is 3.21 thousand. So that's more than Uniswap, the Unicoin, right? That's close, relatively close to Axie, which is, has been massively popular, relatively close to Matic, and then you've got DAI, Chainlink, Shiba, which is still, for whatever reason, being quite utilized, SLP, USDC, USDT. So you've got a lot of stable coins, you've got Chainlink, you've got Polygon, all of these massively popular projects, and then up there you have Hex. In terms of just pure interaction with the coin. So I said 2 weeks ago that I thought, I actually haven't been tracking the price of Hex, so I'm surprised that it continued to pump. So I said, look, if this continues, I think from a fundamental perspective, at least, it's a decent sign. It suggests that there's growing interest in the network and growing interest in the to create value on the network. So that's one thing that I want to look into. The second thing is, because there's there's this amount of this type of price action, we need to check what are the on-chain signals as far as whether there's a increased sell-side pressure, right? So there's a few things that we can do here. First of all, let's look at the amount of Hex moving to known exchange wallets. Now, I don't think there's a lot of Hex on exchanges, right? There's like very, if you look at supply on exchanges, yeah, there's like 0.014. So this is actually not that useful of a chart. That being said, we can see spikes in exchange inflow around local tops previously here. at the moment, it doesn't seem like there's a whole lot of hex being moved to exchanges. Let's look at active. Okay, this is probably a bit more clear. So this is active deposits. Active deposits essentially is a metric that looks at the amount of addresses that are being used to funnel a coin to centralized exchanges, right? So we can see every now and again spikes in active deposits around sort of a possibility for increased price correction, local tops for hex. It has been picking up a little bit over the past couple of days, which is to be expected. It is to be expected that you will see, and if I look at the 12-hour interval, it's even more clear. You will see an uptick in the amount of addresses looking to deposit hex to exchanges, probably to take profits. So yeah, one thing to keep in mind is that this could be a potential signal that we are looking for a short-term sort of cooling off period, maybe consolidation, maybe even a correction. Looking at social volume, okay, so this is obviously a little bit concerning. Social volume, right? It's a metric that tracks the amount of mentions of hex on crypto social media. Let's look at the all-time social volume for hex. This is the last time. So this was December 19th. What was the price of hex at the time? Actually, it was just the beginning of hex. So since then, basically, it's the all-time high in mentions of hex ever, is what we're seeing over the last couple of days. We have seen one here before this first correction, and then we're seeing another one, I guess, more recently. Let's zoom in to see. Yeah, here one big spike, and then another one happening over the last, 2 days. Generally speaking, large spikes in social volume can point to increased market euphoria, and as a result can show sort of increased risk of short-term correction. Now, I will say there are caveats, especially during sort of bull runs or bull cycles. If you look at Solana, right? Let's look at its social volume. It's been going up like crazy for a while now, right? Now, yes, you could say social volume has. Let me move it to an 8-hour interval. There have been spikes in social volume that coincided with very like short-term corrections, like here, right? You see the spike in social volume. Look at the price. There has been a short-term drop before, very quickly before it recovered. We had another sort of spike, started to consolidate, another leg up. We had another spike in social volume for Solana, crash, another leg up, and then we had another big, I think, an all-time high spike in social volume for Solana, and now it's crashing again. So it's not to say that if we now look at Hex back again, right? This isn't to say that Hex is done with its rally or whatever. It just points to a increased risk that the price is going to normalize. These metrics need to at some point cool off. The crowd needs to understand that they're being a bit too greedy. And maybe even move away from the project a little before we can say, okay, it's now a decent enough territory where we can say it's not overvalued, right? If we look at the average sentiment towards Hex, I'm actually very curious to see what it's like. Is it gonna be super high? Maybe. I mean, yeah, it is. All right. Yeah, so this is the sentiment towards Hex, guys. Look. Proceed with caution. Seems like we're in uncharted territory. This was the basically the biggest sentiment spike since we saw the last sort of Hex uptick before local top. So a lot of people are talking about Hex, and a lot of people are really excited about Hex. Historically speaking, I don't think that's necessarily a great indicator for Hex. Like, even if you look at it here, right, a lot of people were obviously also excited about Hex back in May before we started to, but obviously this was a market-wide correction. But, spike here, local top, spike here, local top, spike here, remains to be seen. Overall, I think from an on-chain perspective, I go back 2 weeks and look at our video. We talked about Hex. I said, look, active addresses are looking fine. People are obviously using this network. Now there are yellow flags starting to emerge, right? If you look at the Hex's MVRV ratio, I think it's probably going to be super massive, right? 67%. Okay, how massive is that? It's pretty big. Yeah, I mean, it's at this point where it's sort of relatively let me do one. it becomes pretty unsustainable. So there are a few times in the past 2 years that we have seen Hex remain above these levels in terms of its MVRV ratio, but it doesn't last for long. So well, it seems like we're in the zone where Hex is gonna look for some cooling off period, at least based on on-chain metrics. So obviously, it could just as easily continue for like break 0.5. I'm just saying what we're seeing in terms of its on-chain data and social data. So a few yellow flags for Hex most recently. Let me look into net for profit loss to see if there's anything interesting. So okay, net for profit loss suggests that a lot of people seem to be taking profits along the way, which is to be expected. What I'm concerned about is active deposits being on the rise. Obviously, suggesting increased sell side pressure. That's one. And another thing that I'm very concerned about is social volume and social sentiment. Both of these suggest that Hex is quite overvalued at this point in time. So yeah, I think that's let's just leave it at that. Brian, anything to add before we I think end the call? We're at about 15 minutes past the hour, so yeah, we should start wrapping it up.
Yeah, I think this is a good wrap-up time. We've gone through a lot today. I feel like this was an especially packed episode of our weekly show here. But if there's ever any extra explanation you guys want on any of these metrics, you would like to go over things in further detail, we of course have tutorials on our YouTube that you can check out anytime. And then we also have our own Discord server where you can come in, talk in the general channel or in the pro channel if you have Sandbase Pro, and we will be more than happy to go over things in further detail and get you all up to speed.
Yeah, I think in general, guys, that's going to do it for us today. Thanks everyone for staying until the end of the video. If you like this type of analysis, be sure to like it and subscribe. Generally, we're looking to increase our reach in terms of YouTube as much as possible. So if you have somebody that you know that could maybe benefit from this type of discussions, let us know. Share it with them so they can we can grow the community. We're trying to break 10K subscribers in the next month. It's a pretty ambitious goal, but we're going to be publishing more videos and in general hoping to ramp up those numbers a little bit. It's good to have a goal in mind, right? So that's going to do it for us today, guys. We're going to be back probably Tuesday, if not before, with another shorter video. We're going to talk about a specific topic, whatever is interesting at that point in time. So you won't have to wait until the next Friday. Also, make sure to join our Discord. The link is in the description of the video. We have a few trading groups there where people talk about specific chart setups that they see. So if you don't want to wait until Friday to talk to us about coins that you are interested in, we're over there. So just ping us and let's continue our discussions over there. All right. Thanks, Brian and Max, for joining us for the call. We'll talk to you all in 7 days.
Many thanks, guys.
Bye, guys.